Well, good afternoon. Time to have a look in at the markets. But before we get to that, we had JSE-listed Nampak release their interim earnings today, and what was actually a challenging period. And to talk to us about the first half and what we can expect in terms of outlook, we are joined by the CEO, Eric Smuts. Eric, thank you so much for your time. I mean, let's look back at the 6 months that was going into the period. What were your expectations versus the reality, given how much has changed in the background?
First of all, good afternoon, Natasha. A very challenging last 6 months, but I must say very little that's caught us by surprise. If we go back to what we expected for the period, I think it's pretty much what played out. A couple of surprises would include certainly the conflict in Ukraine and the impact on oil prices. But a general trend throughout this period has been very high commodity prices and commodity prices that kept on going up, and as a result requiring further investment in working capital. On the other side, I think demand has been stronger than we expected. We had very strong performance from all our key markets, in particular the South African beverage can market, where we used to have big export contracts in the previous period that came to an end, and all of those were replaced and even more than offset by growth in local demand. So that was a little bit unexpected, and we're still seeing that strong growth. But overall, very pleasing results. All our key metrics has gone up, with the exception of the required further investment on working capital. But as we see commodity prices ease off, and so it's already started to doing that with the exception of oil, we should see a sort of a inflow from our working capital. But at the moment, certainly the pressure is still on.
Take me into your confidence in terms of the discussions you're having with customers, especially when it comes to the topic of having to pass on costs onto them, given the high inflation environment and those input costs that are rising.
I think there are two categories here. First of all, the biggest part of our business, which is beverage cans and aluminium, that is a well-established mechanism for how the cost of aluminium is treated, and it's through a formula where there's a monthly adjustment made that compensates for both the impact of the LME itself, the cost of the commodity, and the rand dollar. So there's no discussion needed on that. As prices increase, those costs are passed on, and again, similarly, when costs come down, they get the benefit of those longer costs. On the steel side, for typically our food can business, etc., that's a little bit more difficult, mainly as a result of the reason that the price of steel is not a publicly listed commodity. So therefore, it's very much dependent on contractual positions, and therefore you don't have that disclosure in the market where everybody can just follow the indices. So that's a more difficult discussion. We do make use of public indices, the metal bulletin price, etc., but that's a more difficult discussion with customers. Generally, we are successful in making those adjustments, but sometimes there is a bit of a lag. But in principle, it follows the same discussion as with in the case of aluminium.
When it comes to the disposal of your non-strategic asset, how easy or difficult is it in this market?
Very difficult. In current market, to get reasonable value for businesses is difficult, and as a result, we have not been successful in disposing of some of these non-core assets. But it's a continuous process. We are still engaging with potential buyers, and we do a continuous assessment of our portfolio, and we look at whether assets has got good strategic fit, and we also consider whether even a asset that might be considered strategic is actually giving us an appropriate return for the related risk. So that is a continuous process, and it's not stopping.
Erica, let's leave it there, and certainly we will catch up with you in the next half of the year as you do finalize your financial year results. However, that is Eric Smuts, who is the CEO of Nampak, taking us through the 6 months that was. But now to talk to us about the actual markets and what we are seeing in terms of the dynamics unfolding. We did see earlier on a bit of a mixed performance when it comes to the Asian markets, looking at the Nikkei down about 0.25%. The Shanghai markets in China, those were in positive territory, up about 0.5%. And this is as pandemic hit Shanghai tries to navigate its way out of the strict lockdown rules that have had an impact on the economy, bringing in that pressure in terms of supply disruptions, and a lot of investment managers having to dial back their forecasts, especially when it comes to what is happening from the Chinese economy. Nonetheless, we did have the FOMC minutes come out last night, reiterating the point by officials that they are considering at least several 50 basis interest rate hikes. FOMC saying that the policy may have to move away from neutral to a more restrictive policy. But to talk to us about the dynamics that we are seeing in the markets, we are joined, of course, by Glenn Silverman, who is an investment strategist at Riskura. Glenn, thank you so much for your time. I mean, in the industry you're in, you're networking, you're meeting different asset managers and various other role players in the market. And I'm wondering, from the conversations you're having, and I know you traveled recently to the UK, how is everyone feeling about the investment climate? Are they having that bearish sentiment?
Yeah, thank you. Nice to chat to you. And I have just returned from the trip. I was somewhat taken aback at maybe the level of bearishness out there. People are very concerned. I'm talking about senior asset managers, people who work in asset allocation space and therefore have seen market cycles before. Comments by some of the people I rate very highly is this is the worst environment we've seen in decades, and we think it could continue for a lot longer, just because we had call it 20, 30 years of falling inflation, lower interest rates, rising asset classes, and we're now seeing some of that reversed.
Right. Let's talk about some of your assessments of both the local and global markets, because some are anticipating either a recession in the UK or possible recession in the in the US. And I'm wondering, when you look at your screens, what are you seeing?
Yeah, I try not to look at the screens too often because, that's short-term noise. And I think one wants to focus on a little bit more strategic and longer-term views. Again, allied to the bearishness that I heard in the UK was the fact that most in the UK were pretty convinced they were going into recession. So it's quite a pessimistic view out there, quite a bearish view. And in fact, if they weren't heading for recession, they're talking themselves into one. Now that's just the UK, clearly impacted by stuff like Brexit. I was surprised to hear just how significant the Brexit impact has been on the UK. But the truth of the matter is this story is replicated in the States and others as well.
In an environment like this, what are you reducing or increasing your exposure to?
So, it's a great question. But the truth of the matter is one hopes that people are taking a long-term, more strategic view. If you're more institutional, maybe you have an asset liability model. But even if you're a retail investor, surely you've given some thought to kind of the appropriate mix. Now, clearly that does need to be reassessed in terms of a very changed environment, not only war in Europe, but obviously high inflation, rising interest rates. We haven't seen stuff like this for a long period of time. So on balance, you need to be more conservative than you were beforehand, a bit more prudent, a bit more patient, a bit more cautious. But I would be hoping that most people were not changing their strategic asset allocation in any major way, but tactically, I think they're wonderful opportunities.
On that note, then, what are some of the questions you're asking yourself when you look at the markets? Because I know, for instance, I'm looking at when are we actually going to reach peak inflation? What are some of the questions you're asking yourself?
There's such a long list of questions to be asked, and that's a very important one. Obviously, the peaking of inflation is critical, but related to that, but not entirely tied to that, is kind of rising interest rates, because as interest rates go up, asset classes must struggle and will struggle. So those are two key questions. The inflation question, but remember, interest rates can move up faster, slower, and almost certainly less than inflation. To expect, for example, current American inflation at 8, even if it fell to 4%, we're not going to see short-term interest rates getting anywhere near, those type of levels. So those are critical questions. There are so many more. I mean, when the markets bottom, the question would be, have they bottomed? Is there good value? Is it time to get back in? My sense is in a trading tactical sense, perhaps, because markets are very oversold. But on a kind of medium-term perspective, as we face slowing economies, rising inflation, rising interest rates, I think we can wait a bit longer.
Before I let you go, we were talking about inflation. How concerned are you in the second half about inflation locally, given that a lot of the retailers and food producers are starting to feel that pressure, and at some point, you're going to have to pass it on to consumers?
So I've been really intrigued by inflation globally, which has obviously gone up a lot, and yet much more in the West, the likes of the US. I just returned from the UK where they printed a 9% inflation number, high numbers in Germany, and yet in many other parts of the world, in particular in the East, the likes of China, Japan, even Australia, inflation rates are much, much lower there. And South Africa is fascinating because we have a propensity to be a high inflation country, and yet I would argue our inflation has been fairly well controlled. So looking out to the second half of the year, you have to be a little bit concerned because the supply shocks haven't hit yet. There's high oil price and potential to go higher. And obviously you've got food inflation, which is really high, but increasing. I see in Johannesburg, they've just announced new municipal rate hikes, etc. It's all adding to that pressure. I'd be a little bit concerned about the second half.
All right, Glenn, let's leave it there. Thank you so much for your time. That is Glenn Silverman, who's an investment strategist at Rescura, talking to us about some of the inflation themes we are seeing playing out in the markets and in also some of the companies releasing their earnings. That is it from